basically. All right, let's go.
So SPY, I mean, here's, you know what? Let me just do, I'm thinking I should do from a monthly perspective. All my SMAs are always locked on the daily, so it might look a little funny right now, but from a monthly perspective, let me just see if there you go. It's just like you're talking about, extremely neutral. So what I can say is we have exhaustion on both ends in terms of, and I'm starting the timer now, exhaustion from both the bulls and the bears. We call this like an inside month. So meaning if this is January, I'll just put a little high that's 697.84. You kind of assume that holds as resistance, but also 676 is downside support from a monthly perspective. And when we get locked into this kind of stalemate, it's almost like, you know, I've been saying this, here's a weekly, I've been saying this term counter trend trades a lot. It's almost like you have to assume that any movement is a counter trend trade, whether it's up or down. And in this environment, until proven otherwise, at the index level, you still really kind of need to assume that support holds, but also that resistance holds. So as traders, you're going to get chopped up like badly. This is death by 1,000 paper cuts if you're literally trying to fade a breakout or trying to take a breakout, because there is no breakout here. Just to be completely fair, this is sideways action. This is prime for like upside calls when you're at the highs, you know, downside, you know, upside calls is in selling calls, selling premium to the downside when you're at the lows, or like really longer dated condors. That said, we're about to get a couple catalysts right now, but that's where we've been. If I drop down to a daily right here, I'm going to actually turn on, I talk about this NFP stuff all the time. I'm going to go ahead and like turn it on really quick. And let me just tune this because I don't use this layout a whole lot. I'll just go 5. But we talked about in terms of an actual breakdown. So the orange lines are still here. In terms of an actual breakout, and this is support, what we need over 690, 689 and change, like 689 and a quarter definitively. And what we'd be looking for is a full day open and close above this level right here. We don't have anything close to that. Like we have days that are opening on or above, but closing below, days that are opening below and closing above. Same thing for the downside. You need below 682. And then honestly, your trade is just at 675. But that's just that one range, but we're not getting full days trading below 682 either. So from that perspective, this is a very clean tradable range. And I keep dropping down in time frame so you guys can see what this looks like intraday. You know, what we do as traders is we tend to want to trade what we call the edges if you're in a range bound market. And if you did that, meaning if you were going long at the lows, short at the highs, I mean, that pays you pretty well. And this is the market that we're in until we have a reason to move, which we might get one tonight. So I have to say that. And we might get one tomorrow after hours. But here's the trades and here's what they look like. So from here, if we get that trigger high, your upside is just at 697. That's that monthly support, this orange line. That's it, right? 697, 698. Expect resistance to hold still. And then towards the downside, we have that 670. We have a lot of support levels in this 670 area. But again, we're not right now this week we're not at risk of breaking either one of these sides. Meaning like we're not going to break 600 in strength and hold it. We're not going to lose 670 in strength and hold it this week. So not a reason to do anything really, except for wait or maybe sell some premium from a SPY areas. All right. So then we're talking about SMAs. We are, now that I've loaded my sorry, let me turn these other things on. We are in terms of below these like simple moving averages. And the way that they're setting up is that we could have like a bit of a flush moment where momentum all of a sudden actually could start to accelerate to the downside. But full-blown breakdowns, you're looking still below 668, give or take. You see 662, probably in the 650 area that you actually 660, 661.
Are you trusting any of the little bounces we're seeing every
No.
other day? No.
No, I don't. I honestly don't believe that any bounce is worth buying right now. Here's the cues, and this is like equally important. It's just not worth it from a risk to reward perspective. So if if seasonal trends are gonna happen, meaning like if the seasonal headwinds actually play out, the prediction markets are actually right, and we do get a pullback. Well, I understand that some things are down like 50% from their highs, and your natural instinct is to be like, oh, it's on sale. I would caution that sentiment.
Hold on, people are saying you're muted. I can hear you.
I mean, subtitles.
No. You a lot of people can't. Guys, refresh the screen. Yeah, that's YouTube's issue. That's YouTube's. Yeah, refresh. That should be YouTube.
Hey.
Okay, you're good. You're good. Go ahead.
Have you seen my boy found this hula girl? You can't.
Where he found in the house randomly?
Yeah, it's actually from Hawaii.
Wow. Okay.
I think it's a nice little.
You know, I used to play with action figures
Trinket.
when I was little. People said it were dolls, but they were action. All right.
So what I was just jumping over to what was I jumping over to? I was jumping over to the cues just because I think that's a little bit more at risk if we actually lose these areas. So unlike SPY, which has SPY has a lot of downside support, QQQ has a lot of upside resistance, and it's literally sitting on it right here. So we are on. So here's the box. We are at the top of resistance. So 1, 2, 3 shots. If you can't make it through on the third shot, usually the failure from the third attempt, 1, 2, 3, is pretty aggressive.
And the level you want is 610 to break above.
I mean, I would like 610, but that's not. Honestly, we're pretty far gone, dude. On SPY or on the cues. So it is this level, literally 608. So let me just make this month. So just this month here, 608, right? So this is our February, and every non-farm payroll day, I'm kind of thinking, is this the high or is this the low for the month? And so far, what we've determined is that it was in fact the high on February 11th when we got our NFP numbers. It has been. And right now we're just retesting the lows of that exact day, which is currently acting as resistance. So resistance once here, resistance once here, third day resistance. So if we get through 608, meaning tomorrow, if we open above and press higher through 608, we're going to see probably a pretty quick move into 620, 618, 617.50, sorry, to be explicit. But that's it. So I have to be really cautious. Like from there, I mean, that's really the trade. It's not like I'm trying to say, it's not anything crazy right now. So, I mean, for all intents and purposes across the board, it's kind of more of a wait. The issue I have is that if we do lose this area, let me just put this on, then the downside on Qs is significantly higher. So like we can't get over 608 on QQQ. It's like 580s and lower. So it's a bigger gap down here.
So so to simplify it, is this short-term bearish or once again choppy? If you had to pick. It feels like it's bearish if we can't get above these levels too.
Yeah, it's more bearish than it is bullish. I'll say that. And even a bounce is more bearish than it is bullish.
Yeah.
So I feel like I'm seeing weak bears, because the other truth and why we're kind of pinned right now is when you look at the charts, it's like we're seeing the weak bears again, because quite frankly, we should have been able to push this lower at the index level up for both Qs and SPY a while, like earlier this week or maybe even last week, but we haven't. They haven't yet. unless you're IBM or Intuit or Expedia or something that's in the AI, eating my lunch narrative. But across the board, we're still seeing the other two tickers, the two tickers that I was talking about needing to watch. And I'll just do this for RSP and IGV. RSP is still strong. Like it's still actually holding all the levels that it needs to hold. And it held over 205.5, which was important for RSP. And the trend is still, firmly intact over here. RSP, by the way, is the equal weighted ETF. So
it's having one of its best years in a while.
Yeah. And so this is the saving grace for the market. Last time we spoke, I think it was here, we were at the low end of no, this was my Monday stream. Monday, we were at the low end of the channel. And it's like, you look for it to hold, but this bounce here is nice. I need to see new all-time highs like this week in RSP, because it's still kind of, it's not doing the greatest right now. It's okay. There's nothing wrong with it, but it's not like, oh my goodness, this looks like it's going to bounce either. So it's because of that, it gets a little bit more neutral, and we haven't had a solid pullback. Now that takes RSP is good. The reason I'm watching RSP is because it's strong is going to tell me whether or not we're actually going to pull back. Because if this does not hold trend, or if RSP starts to fail, then the broadening across the board is definitely weakening. And that would be the biggest crack in the market mechanics, if you will, to say that we are going to get a larger pullback at the index level. So that's why this is really important. It's very important that it holds trend. You don't have to own this or anything. But
because RSP isn't heavy tech, it's everything else.
No,
so
it's
if this breaks
weight
down, then we have issues.
If this breaks down, then what you would know is that the broadening theme is breaking down, and the broadening theme is what is holding the market up. So that would be really bad.